You have mentioned Palo Alto a lot, and maybe I should have stopped at one point and said, now, wait a minute, get everybody on board because, wow, what a performer this one's been.
Yeah, I mean, this is a company that has a nice secular tailwind behind it that's going to drive growth into the future. And now they're, introducing the omnipresent AI into the narrative. In fairness, I will tell you, we have had to trim it in some places, but we still own it in a very large commitment in three of our strategies. So I think this is a company that you just wait, you take your time, and May is giving us a lot of volatility, which is the friend to long-term investors. And so you look for opportunities to step in and just initiate or add to your holdings.
But what's interesting is, what about those? And there's been a great debate all day long going on about this. At what point do you take profits, right? I mean, they've been on some great runs. I know you always have a bunch of candidates you're looking at for kind of the next ones to make a move like this. Why are you sticking with it, or should people who are now looking at the story thinking, okay, I missed this move, or there's still time to get in and chase it?
Yeah. So, Kelly, I think I mentioned to you, I just finished the second edition of my book, The Women's Guide to Successful Investing. And in there, I use a case study. One of my clients, about 30% of his net worth is in Apple. And I have these ongoing conversations with him that he should take some off the table. But he's been right and I've been wrong. Portfolio managers do trim because it's a risk management tool that we have. We don't want the market to make our allocation to stocks. But when you have a great company with a secular growth narrative, honestly, it goes against my instincts, but oftentimes you just should hold on and continue to. And that has built great wealth for, many of the billionaires in our culture because they started companies that held onto the stock.
No, it's so true. I mean, it's always the Buffett thing, right? If you had a punch card, you just had 12 stocks, would Palo Alto now make the cut? Okay, so many different follow-on questions I could ask, but because Amazon's having its shareholder day, maybe we'll talk about that one. A little more controversial. People they hate the retail business, maybe love the cloud, but are nervous about its growth prospects. What do you see there?
Well, I just see a great brand, and I actually think a good management team. I think Andy Jassy is being Tim Cooked, which was when he took over from Steve Jobs. The market underestimated him, continued to say he's not a great CEO, he's not innovative, and they were wrong and he was right. So Jassy brought the cloud business to Amazon. I think that he needs to be given a little bit of time. The stock is up quite a bit, but it still has the potential with the cloud business, with advertising, with retail. There's a lot of levers to pull at this company. And sometimes I think some of these companies get underestimated because they have too many good businesses, the Microsoft problem. But I think you use this as an opportunity, the volatility that is, to add to holdings. And this is when you want to continue to hold. I calculated the return since inception. I can't remember, but it's some ridiculous number. And there have been a lot of ups and downs in that period.
Like 20,000%. I don't know. They're all up there, something like that. It's not just tech, by the way. And obviously people who, they know, Nancy, you're not just a tech person, but Lulu, Chipotle, Toll, by the way, O'Reilly, that one obviously with AutoZone maybe looking a little bit more questionable or maybe not. So there are some consumer names in here, obviously the growthier ones.
Yeah, and actually, Kelly, really quickly, one of the things that investors can do is sell a stock for all the right reasons, which we did in Starbucks, and we were wrong. We'd owned it forever. It is a great brand, obviously. I had some serious concerns over management, the labor issues, China, they were doubling down. And yet I think we were probably wrong about that. So when earnings came in disappointing, we stepped back in. And that's one of the things. If you own companies that have excellent management teams, you can own these stocks for a lifetime. You don't need me to manage your portfolio for you. You can do it yourself, which is actually the point of my book, by the way.
No, and by the way, I was going to say a good Mother's Day gift, but I guess we've missed that. Maybe a good Father's Day gift. I don't know. Quick final comment then, Nancy, in terms of the market overall. Then do you wait to be opportunistic if you think we're going to get a downdraft ahead, or is it just full steam ahead at this point?
Well, so I do think we talked a lot about we expected volatility in May. We'll probably get it through the summer. This debt ceiling circus is driving the volatility. But one of the things investors seem to be missing is that when you go into a recession, so if we do, nominal GDP, except for two periods, the Great Financial Recession and 2020, nominal GDP has grown about 4 to 5%, and nominal GDP has a very high correlation to corporate earnings. So I do think that a lot of this was discounted last year, and that we are in the beginning of a new bull market or the continuation of a bull market. And so I would just continue to add in a very disciplined manner. It's never exciting. I mean, I bought some Microsoft personally last year at higher levels than it bottomed. I bought some at the bottom. I bought more on the way up. That's how you make money over the long term, because at where it sits today, you don't feel too bad even if you paid $250 for the stock, right?
Yeah.
So you just keep picking away. And in some of these stocks, you're getting paid via the dividend and a growing dividend to wait.